Hey everyone, welcome back to the channel. If you've been wanting to start investing but feel overwhelmed, confused, or just don't know where to begin, this video is for you. I'm walking you through exactly how to start investing in 2025 step by step with zero fluff and no complicated jargon. Whether you're 18 or 38, this guide will get you from doing nothing to building your first real investment portfolio. Let's start with the biggest question most beginners have. When should I start? And that answer is simple, as soon as possible. And that's when you make more money, not when the market dips. The sooner you start, the better. Because time, not timing, is the secret weapon when it comes to investing. Compound growth takes time to work its magic, so don't wait to get rich to start investing. Start investing to get rich. Now, before you even open an app or buy a stock, the first step is making sure you're ready. That means having your financial basics in place. Do you have high interest debts? If so, pay that down first. There's no point in investing at 8% returns while paying 20% on a credit card. Do you have an emergency fund? You should aim for at least $1,000 to start and ideally a few months of expenses saved. That way, if life hits you with unexpected bills, you are not forced to start investments early or go on to debt. Once you've got your foundation, the next step is choosing where you will invest. In 2025, there are tons of great platforms like Fidelity, Schwab, Webull, Robinhood, and M1 Finance are some of the most popular. Look for one with zero commissions, a clean app or desktop experience, and ideally fractional shares so you can invest with any amount. Once you pick your platform, open a brokerage account. It's free, it takes a few minutes, and once it's approved, you can start funding it. Now, here's where people usually freeze. What do I actually invest in? If you're a beginner, skip stock picking. Don't waste hours researching the best stock to buy right now. The easiest, smartest way to invest is through ETFs. These are baskets of stocks that give you instant diversification. So instead of picking individual companies, you're investing in hundreds at once. Less risk, less stress, and way better for beginners. In 2025, some of the biggest ETFs for beginners are still the classics. VOO, which tracks the S&P 500, the 500 biggest companies in the US. SCHD focuses on dividend-paying stocks that generates cash flow. QQM gives you exposure to tech giants like Apple, Amazon, and Nvidia. VIXIS gives you international diversification, and BND gives you access to bonds if you want some extra stability. With just 2 or 3 of those, you've already built a portfolio stronger than what most people have. Now, how much do you need to start? Honestly, whatever you've got. $50, $100, $500, it doesn't matter. The goal is to build the habit. Set up automatic deposits, even if it's $25 a week. Don't wait until you feel ready. Start now and grow over time. And the sooner you automate it, the more consistent it becomes. Once you've picked your ETFs and funded your accounts, it's time to buy. And that's it. You don't need to check it every day. You don't need to panic when the market drops. In fact, that's the time to buy more. Investing is emotional for most people, but if you treat it like a long-term game, you win. The market will go up or down, but over time it trends up. Your job is to stay consistent and ignore the noise. Now let's talk about a common mistake beginners make trying to time the market. People think they can outsmart everyone and buy the dip, but most of the time they miss out. The truth is, the best strategy for 99% of people is dollar cost averaging. That means investing the same amount on a regular schedule no matter what the market is doing. Over time it evens out and you avoid the stress of trying to be perfect. Another big tip, don't overcomplicate your portfolio. You don't need 10 ETFs. You don't need every sector. Start simple. 2 or 3 ETF is more than enough. The goal is to grow, not to micromanage. Keep your costs low, avoid high fee funds, stick with reliable long-term winners. That's how you win the investing game. If you're someone who wants to go even deeper, you can open a Roth IRA. This is a retirement account that lets your money grow tax-free. You invest with post-tax dollars, and when you take it out in retirement, it's all yours, no taxes. The limit in 2025 is $7,000 per year, and it's one of the best tools for young investors. It's not either or. You can have both a brokerage account for flexible investing and a Roth IRA for retirement. So let's recap the steps real quick. You start by getting your financial foundation in place, emergency fund, and no high interest debt. Then you choose a good brokerage platform and open an account. You fund it, pick a couple of simple ETFs, and start investing regularly. You automate it, stay consistent, avoid hype, and let your money grow. And that's it. That's how you start investing in 2025. You don't need to be an expert, you just need to start. Because every day you wait, you are giving up time, and time is your most powerful asset. Don't let fear or confusion stop you. Learn as you go, stay consistent, and you'll be shocked at how fast things can grow when you stay in the course. With that being said, thanks for watching. If you found this helpful, hit the like button and subscribe. I post no fluff content on investing, money, and building financial freedom. And let me know in the comments, are you just starting out or already investing? See you in the next video.